Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Burke. and we're going to go into kind of a plan B, right? A couple weeks ago, we talked about repairing a broken trade. We are going to look at how that ended up or nearly ended up. How's it going, Mr. Bird?
Going well. How are you? Had a nice rally?
Yeah. Dude, wild, right? Get a 9-1 and the market does okay and the 10-year goes down. Go figure. Just even if you know what's going to happen, the market will surprise you.
Somebody knows something.
Craziness.
Somebody smarter than us knows something.
Clearly, lots of somebody smarter than us know something. So, but let's talk about your broken trade. You bought something that went against you. You didn't get stopped out because you were on vacation. You started repairing it. So how that all?
Yeah, I'll talk about that whole thing. It's called a collar, but I'll explain how that works. This is my newsletter if anybody's interested, where I go into a lot more detail on all of this stuff. Mm-hmm. Just send me an email at breakpointtrading@gmail.com. And I literally just sent it out like within the last hour. So
very cool.
But these are excerpts from this week's with some little cartoons and stuff.
Nice.
So if anybody's interested, they can just send me a note there. Before I jump into that broken trade, I just want to very quickly show the status of the market. Okay. These are the sectors based on rate of change. So it's the ones that are moving up in the upper left and the ones that are moving down in the lower right.
Oh, okay.
You see energy is the worst performing. The lower right, look, you see how well it performed right up until middle of June. And since then it's fallen off a cliff. And discretionary is the strongest one. And the thing I want folks to take a note of is that down here from the middle of June on, all of these were making higher highs and higher lows. They're kind of stair-stepping their way up. Now they're right at the 50-day moving average. So it's a very important cusp right here. And we've got earnings coming next week. So it could very easily get rejected at that 50-day. But the last month or so, it's been steadily making some nice progress. These are all aggressive technology sectors. Here's technology, here's the NASDAQ 100, healthcare. Here's communication services, trying to make some headway. So these are starting to move up, but we'll see if that continues or not.
Yeah, energy has been wild, right? We were over, I don't know, 120 seemingly a month ago. Now we're in the low 90s. Energy is really broken.
How about that?
Yeah.
It's had a 25% drop in a month. Energy.
That's
so crazy. We'll see what happens. I put a funny cartoon in this week, but you'll see it if you look at my newsletter.
Yeah, I'll look at it.
Two other things just real quick before I get into the broken trade thing. This is the NASDAQ 100. This is what the chart looks like. Again, it's right at the 50-day moving average. We'll see if it breaks through or not. This is the rate of change. And then down here are three of the industries that make it up. So this one right here is the XLK. That's the whole sector. It's above its 21-day moving average. This is the chips right here.
Okay.
It's making a higher high. This is software kind of going sideways.
Yeah, let's talk about software for a second, just because there was some market making news from what is his name? ServiceNow's CEO.
Yeah.
Doug McDermott. Basically came out, I think it was Tuesday, basically said no tech companies can outrun the strong dollar.
Right.
And that's actually something I've told folks on my channel to look for. Multinationals who sell overseas, the dollar's up 20%.
Yeah.
It's going to hurt.
I think the dollar's going to break sometime soon. I think when it does, I think it's going to start declining.
All right.
I don't know when that's going to happen, but when that starts to happen, I mean, McDermott is right, but when that does start to happen, there's a number of things going on that when it starts to turn, you want to be long technology.
Yeah. Anytime at the inflation. So yeah, yes, I agree. So basically what I think you're saying is you believe the Fed will wimp out as other central banks are still raising. That's what essentially you're saying.
I think they will.
Okay.
I think they might wimp out in
September, right? Based on video number 1. Okay.
Right. And the dollar will start coming down. Inflation will start coming down. There'll still be
Yeah,
talks of recession.
it'll start coming down in comparisons to other currencies just to
Right.
tie
That's
it
right.
together. Yeah.
Yep.
Okay.
So software right now is going sideways, and this is security down here, kind of going sideways. They're right at the cusp of their 21-day moving average.
Security. That's interesting. Okay.
And then the next one is energy. So here's the energy. Here's the, actually, this is crude oil, WTIC. So this is West Texas. You can see right here from middle of June, had 25% drop.
Wow.
And then these are the industries inside of this sector. So here's the energy sector. You can see it's dropped way below its 21-day. This is energy suppliers like the Exxons and Chevrons.
I don't know. Have you looked at this? This is a crazy question. You said this twice now. It fell 25% in a month. Has it ever done that before? That's a wild drop.
I don't know. That's a good question.
Yeah, I don't.
Probably has, but that's a good question. Be a good correlation to take a look at.
Okay. All right.
And then the one at the bottom is energy services. So all of these are dropping significantly. All right, just something that's interesting.
And again, the thought here is just like, again, we've talked about in video one, this is really your belief that the Fed's going to pause or wimp out in September. We have real signs of CPI coming down, demand destruction, recession getting close. It's kind of your base case.
Yeah.
Okay.
Yeah, it's why I don't think they'll go to 100.
Right. Oh,
in
yeah.
July.
I don't think they go.
But I do think they'll do 75. And they might do 25 in September. They're going to have 2 more inflation reports before the September meeting.
Yeah. And then you're saying because you're going to get a pause or a quarter, that both of those will be lower than the preceding month, hence having a trend.
What I am saying, and since this is recorded, I'm on record.
Yeah.
I am saying that 2 more reports, inflation will clearly show it's declining.
Okay.
But the Fed has done its job.
So
recession will be more in the forefront.
Okay.
By September.
Sure.
If we're not already in one, we'll know that on July 28th.
Okay.
Although we won't officially be in one.
No, we're not going to officially.
All the news reports will say that we are.
But it won't be declared one. But we've talked about it.
It won't be declared. All the news will say we've had 2 back-to-back quarters of negative GDP. That means by definition it's a recession. It doesn't mean that.
It doesn't mean that. No.
There are other things that go into it for a recession, like housing and like employment. Number is the biggest, probably one of the biggest ones, and that's not going down.
No.
So all the news, the fear mongers will say that we're in a recession, but the Fed will see that too by the time of their next meeting.
Right.
And I predict that not only will inflation not be a big thing that people will be talking about any longer, recession will be a big thing by then.
Okay.
But even bigger will be deflation.
And so you're parroting Kathy Wood maybe 30 or 45 days later. Timing is different, but same talk track.
That's right. I think deflation will be the topic through the end of the year.
I love it. This is why we record. This is why we talk every week. This is cool.
So we'll see. We'll see.
So it's funny. Again, I agree, but my timing is different. Right. So I could see deflation. I can see bullwhip. I can see all this stuff, which people are starting to jabber about now. But it's for me, it's later. It's like Q1, Q2 kind of. It's funny. We see the same things. It's just a timing.
Yeah. I don't know if it's going to wait that long.
Yeah. I mean, it's cool. It's recorded.
The inventory buildup for retailers is happening right now.
Yeah. Walmart.
I mean, they're going to start having sales in the next month or 2.
Well, they're already happening.
Leading up to school starting.
Yeah,
There's going to be huge sales.
Again, I told everybody in December, let's all agree to move Christmas to July.
Right.
Because what happened? Buyers were ordering 10 and getting 3. So what did they do? They ordered 30 to get 9. Right. And guess what? The other 21 show up eventually. That's what's happening right now.
And guess what? The general public who is now being conditioned to think about inflation, guess what they're going to do?
Well, I think they're going to pull back.
No, they're going to say, oh my God, if the prices are fantastic right now, there's all these sales going on.
Yeah.
I don't trust that inflation is really gone. I better buy right now at these prices.
Yeah, we're going to see. It's going to be very interesting. I love this stuff.
Very interesting. It's, I don't know if it's good or bad that we have this recorded.
Oh, I think it's great. I
So
think it's awesome. All right. So let's talk about repairing a trade.
Yep. So this might get a little complicated, but I know some of your listeners understand.
Oh, some of my listeners geek out at what you're doing here. Some of us, like me, I'm like, I have no idea what he's saying, but I'm going to listen anyway.
All right. So I know you're not a big fan of options these days.
Not at all.
And I use them sparingly and in specific situations.
Okay.
In this particular case, I was going on vacation. I own the stock AOSL. It's a chip stock with very low PE. I bought it at 35.80.
Yep.
And I was going on vacation.
Okay.
So I wanted some insurance, just like you can buy insurance for your car or your house or anything else. You're going to pay something for that insurance, right? So insurance in this case is buying a put. So to buy a put, it was selling for, actually when I left, I think it was 34 something. I bought a put at $30.
Okay.
Which means if it continues to go down and it drops below 30, my put is going to be in the money and I'll start making money. Right. So that's my insurance policy. But instead of putting out the $1.04 for that insurance up front, I wanted to get my insurance for free. All right. You don't usually get that on your house or your car, right? So in order to get it for free, what I did was I sold a covered call. Covered call at $35, which means if it goes up above $35, my stock gets called away to the person that bought that call. I'm selling them the call. So the person that bought the call is banking that it's going above 35. If it does, I am obligated to give them my shares for $35. And in order for that obligation, they pay me $1.11.
Got it.
Okay. So I make $1.11 on the covered call. I pay $1.04 for the put. I essentially have insurance now for almost nothing.
Right. You actually make 7 cents having.
I actually made 7 cents in order to have insurance while I'm on vacation.
Understood.
Okay.
So far, so good.
All right. So here's the initial purchase, $35.80. Current price when I did all of this was $30.
So the trade went against you.
Trade went against me. So already down $5. So unrealized loss was 16% loss, $5.68. Okay. I sold the calls for $1.11. So that $1.11 goes right into my account immediately.
Yep.
I also bought the puts. So this is this collar strategy up here.
7 cents, you recognize.
7 cents. So now my unrealized loss is $5.61. It's essentially unchanged with the percentage.
Yep.
All right. So the new cost basis now is $35.73, 7 cents off of the $35.80 that I originally paid.
Totally get it.
All right. That's my new cost basis, $35.73. The price did drop. When I came back from vacation, this was actually the Monday or the Tuesday rather, the Tuesday after I got back from vacation. Tuesday morning, this was selling at $28.74. So remember, I bought my put for $30.
Right.
So it was already in the money.
Okay.
So I sold it back right away. I didn't wait till the expiration, which by the way is 7/15 this past Friday. I didn't wait for the expiration on the 15th.
Cool.
I sold it right then.
Okay.
So I made $1.90 where I paid $1.04. So I made 86 cents.
Okay.
All right. So I've already now have a new cost basis of $33.83. Right. Off of my $35.80. I still have the covered call. So I still have this $1.11.
Right.
And the obligation to sell my shares if the stock is above 35.
By the 15th. Yep.
By the 15th. So I'm watching closely. On 7/15, right near the close, the stock was at 35.12.
Okay.
All right. So if it had closed on Friday and I didn't do anything, then I would no longer own this stock. I would make the $1.11 plus the $1.90. So my cost basis would be much lower and I'd actually make a profit.
You would have. Yep.
But instead, I bought back the calls just before the close.
Okay.
Now, because whenever you sell something, the value goes down as you get closer and closer to the expiration date.
Correct.
All right. So the value was only 20 cents.
Mm.
So remember, I was given $1.11. I sold it for $1.11.
Mhm.
I bought it back for 20 cents. So my net that I made was 91 cents.
Nice.
So now my new cost basis is 34.03
Mhm.
because I have to add the 20 to the 33.83.
Yep.
And now my unrealized profit and loss is $1.77.
Yep.
Or 5%.
Nice.
Right.
And you have the stock still.
And I still own the stock.
Nice.
So now I can decide next week what I want to do with it.
Yeah.
If it keeps going up, that's great.
So
I'll
let
put
me
a stop on it, but now my cost basis is 34.
Right.
So I could
So-
put a stop at 34 and break even.
So that's my question, knowing how you're trying to teach me to be better. You're not on vacation anymore, so you're not doing this collar strategy.
Right.
Have you put a stop? Will you put a stop? If so,
Yes.
where do you think you're putting it?
I will put a stop on this depending on what the market looks like on Monday.
Monday morning, Monday close?
Monday morning before it opens.
Oh, okay. All right.
If it had a nice close on Friday, it's still got a little ways to go, like I showed in the last video.
Sure.
Little ways to go to that 50-day moving average where resistance is.
Okay.
It may go up Monday and maybe Tuesday.
Mm.
And when it hits that resistance, then I expect, because earnings are coming up, I expect the market to roll over and start going down.
Okay.
So depending on what the market looks like on Monday, I might just put a stop in at 34 or 33.50 or something like that. Very small loss.
Okay.
If
And then it closed. Did it close at 35.12?
Closed at 35.12.
Okay. I got you. Okay.
So if it does go up, let's say it goes to 37, 36, 37 on Monday.
Yep.
I'm probably going to just sell it
And be
and
done.
take the profit and be done, because we're running up against resistance here soon.
Gotcha. Okay.
And and earnings are next week, and they may not come in great. So
Yeah.
the market may roll over and go back down to the bottom of the channel.
And again, this was always a trade for you, not an investment.
Yes, correct.
It's a very different game. Okay.
All right.
Very-
So that's the end result, because the 15th was the expiration. That was Friday.
That's awesome.
So it ended up, instead of a 16% loss, it ended up with a 5% gain.
Well, that doesn't suck.
Right.
Yeah, there's a lot of power, a lot of sexiness in here. And again, I am not playing this space. I love learning and watching. Dan is the trader. I'm going to hopefully be an investor, which means I'm going to buy and hold for the long term. I'm not going to be interested in doing these covered calls and blah. It's just too much for me. I'm a real estate guy who wants to diversify into stocks that have good moats, good earnings, and are on sale, which hopefully I'll get the opportunity in the next couple of months.
Yeah, I think you will. And if things pan out the way that I've said that they will, I don't think it's going to be a V bottom. We talked about that before.
Sure.
It's not going to go straight up. A lot of traders who went through the COVID crash, and a lot of traders came in
Yes.
right after that and started buying and thought they were brilliant.
Oh yeah, a lot of investors are going to repeat what I did, where we came in at the right time. The market went with us. We looked like genius. I mean, hey, turn $7,000 into 180. You
Right.
feel really smart. I did that, and then the market goes against you, and you don't feel so smart.
Yep, it will not be a V bottom this time. It's going to look more like this.
Yeah, I agree.
We're going to bounce around up and down inside of a channel. I already showed that the last video that we did. Already showed that we're bouncing in a channel right now.
Yeah.
And we could do that for a while. I think around September, probably that next Fed meeting, a lot of these things are going to start to come together. I think the dollar will start rolling over. I think the Fed will not be as aggressive. I think recession will be more, and even deflation will be more of a topic.
Yeah.
And then in September through the end of the year, I think we're going to start taking off. That's what I think.
I love the fact that we talk every week. So Dan, one more time, what's your newsletter in case anybody doesn't have it already? Right, 34, number 34.
There you go. Last one. Yeah.
Yep.
Right
So
there.
in case you're listening on the podcast, it is breakpointtrading@gmail.com. Dan, thank you very much. Thank you very much for doing this on Saturday. I appreciate it.
You bet. Have a happy birthday tomorrow.
I will. Thanks, buddy.
All right. Talk to you later.